Thanks for joining me on my market report. My name is Mike, and this market report is about mortgage rates. We kind of like to bring out to you the information that drives interest rates, what impacts them on a daily basis, whether rates are going upwards or downwards, what's week ahead, kind of give you an idea as to where mortgage rates are going to go and what kind of watch out for, what could drive rates. So this will hopefully give you a better or more informed decision if you're in the market to refinance or purchase. You want to kind of float your lock if you're in the process and want to float, or you want to hold and see if you can get something better or not, or if you want to lock in case things get worse. So this will hopefully help you make a better decision on those. A little bit about myself is I am a loan officer. I do work with the national lender. We're here to help you in any method, whether if it's you get questions about mortgage rates or mortgage programs, if you're looking to refinance or looking to buy and need that pre-approval and finance the next property, we're here to assist you. So without further ado, we'll just jump right into this report. We'll start off with the economic reports scheduled for today. We got two here, as you can see with the highlighting. The first one we'll start off with is ISM Manufacturing PMI for the month of July. So June came in at 60.6. Anything on this index, anything above 50 is considered improvements, and we've been forecast for the month of July was at 60.9, so it's supposed to go upwards. Instead, it actually went lower down to 59.5. This is the first time we've been below 60 this year. Now, a lot of this has to do with the supply chain that we're still kind of on hold. Things are still kind of are difficult to reach. So now we're starting to see manufacturing drop as a result of it. Construction spending for the month of June. July had a revision from its initial report of being down 0.3 to a slight improvement to being down 0.2%. Forecast is calling for increase of 0.4% for June. However, it only came in at 0.1%. Let's jump ahead, take a look at the headline news. Stocks are up so far today. They kind of like the comments that were made by late Friday by Fed Lyle Brainerd, basically saying that after the FOMC last week, they thought they would be looking towards Jackson Hole if there's any talk about tapering. She kind of indicated that she does not expect the Fed to announce any tapering at that meeting. So really, what she did indicate was that the Fed's going to really kind of want to get back into the fall after September, look at towards the jobs will get some type of back to norm, where kids are back in school, working, and everything else, that we get some type of normalcy before they look at these things. And these are so this kind of gave the stock market or investors a reason to hope that things will be prolonged a little bit longer. So the next time they may even consider tapering probably won't be until their November meeting. Like I think it's around November 3rd. It's like that'll be their next meeting, and after a lot of this data will come in and give them to decisions whether to start tapering or when they might start tapering or talking about it at that point. The stocks are also kind of looking at the infrastructure bill. We got some mergers and acquisitions going on. The infrastructure bill, I guess, is kind of progressing ahead a little bit here. So we'll have to kind of wait and see what happens there. But they are kind of keeping an eye on that as well. So let's take a look, see how this is all balancing out for mortgage rates. We were up much higher. A lot of lenders, when they reached up here, were up about 13 basis points. They started pricing in some price improvements right there. Last week, I said, remember, last Friday, we had more of these uh, candlesticks, or I'm sorry, the wicks here on these candlesticks here. And last week we actually went back upwards a bit more, and we don't have as much of a candlestick. So I said that just be careful because it could create some uncertainty. We showed some improvement late in the day Friday. We continued that improvement. Like I said, we're up about 13 basis points. We have scaled back a little bit. We're down about, we're only up 9 basis points. So already lenders had priced in for better pricing today than what we saw on Friday. And then here's yields. Yields too were way down. We're down to like around 115 level. Now we've kind of pulled back to around 117 right at this point here. So yields have also kind of going through that position now. But again, we're seeing some weakening, so we gotta be careful to see if they continue this trend or if they're gonna create another floor, like a range here. So if we break down this level, are we going to stay down here or not, or are we going to kind of break back into this level here as well, back in the 120s again? So we'll keep our eyes open here. But meanwhile, today mortgage rates had a slight improvement today, which is obviously good news for those who are in the markets. Again, if you guys got questions about anything, please feel free to reach out. We're here to help you out. And if you guys like the video, please smash that like button. It certainly helps us out. We greatly appreciate you. And we'll look forward to seeing you guys in tomorrow's video. Have a great rest of your day. Bye-bye.